Good morning, everyone. My name is Anne-Marie Band. Today is Thursday, January the 19th, and this is the Moneyball Morning Report for the Benzinga Pro platform. So, thanks for all the great notes. A couple of folks said, wow, how come you timed that so perfectly? So I'm going to give you the secret sauce this morning, and you're going to go, no way, it can't be that simple. But I promise you it is. What you have to pay attention to is what the traders have been telling you in times past. Now, I'm using TrendSpider here, and we don't have the SPY in live time, but we do have the futures in live time, and the topic is exactly the same, really, in terms of motion. So first, let's talk about what we've got going on. I really hate to sound like Chicken Little, but yesterday, actually it was day before yesterday, at about 9 p.m., the Bank of Japan came out and said, hey, listen, we're not doing anything else with the yield curve. Now, the first time they did something with the yield curve, they moved it 25 basis points out, meaning that that yield curve can get stretched from place to place. Never mind about the wonkiness of it. The bottom line is, what they hoped to do was make trading get more fluid. But instead, they triggered a message to the market participants that said, hey, if you're going to move it a little bit, then I bet you've got to move it a lot. And so it really forced traders into that space where they were trying to push against Japan to make another move. And so a lot of times traders think they can do this when their pockets are very deep. The biggest story about this is the man who broke the Bank of England, George Soros. Look it up on YouTube. You'll see it. And a lot of people wish they could do that sort of thing, but, Japan has said, hey, listen, we're going to buy it ad infinitum. Now, never mind what that means, but in the big picture, folks, there's going to be an event in currencies. I don't know where it is. I don't know when it is. I don't know how it looks. But it's going to be ugly. And so for the little bit of time between now and then, whether that little bit is 6 months, 1 year, whatever, we're going to take it kind of easy in terms of moving through the motions. The second thing is that we had a bad retail number and we had a bad producer price number. Let me see what the let's see what the news is on. Okay, we don't have what the jobs numbers are in. We have the jobs numbers, we have the EIA report, we've got a slurry of things coming in, and traders are starting to get a little nervous because the economic news is a little bit soft. And so a lot of people, here's the bad thing, traders, we have terrible memories. And as soon as things start moving up for 4 or 5 days, we're like, woohoo, break out the punch bowl. And see, it doesn't work that way. It just doesn't. And I know I'm rambling a little bit today, but I want you to exercise caution. Okay? So let's take a look at where we are. We're sitting inside last month. Okay? This is a monthly chart. I need to click don't show that again. Now, if we go to the weekly, we're going to see that we tested a new high yesterday, which I did not expect this to do, but again, I think it was short running, right? And then we broke below the open of last week. That's bad. That's really, really bad. And so what we have here now is that we're looking at the week before last for our support zones. And so I see traders trying to buy this ledge up. So somebody says in the Benzinga chat, holy cow, how did you get the bounce or the fade? I think we traded a bounce because we were doing short puts, and then I pulled it off as soon as I saw it hitting into resistance. This is exactly what I do. I will look at the current candle in motion and 2 candles to the left. And those candles will tell me the approximate trajectory for the current candle. whether it's upward or downward. And if I lose the bubble, I'm going to go to prior candles that have the range that I'm looking at. So really, if we're taking a look at this, here's last month, very big. Here's 2 weeks ago, that's the range. Traders are going to try and buy this bottom. And really, we've seen them do that for the first 90 minutes of the morning. So here's what I know. I don't really want to short it here because it's coming into a space where the very last time people were here, they were buying. So I'm going to think to myself, oh, if they're buying, I'm going to wait for the fade and then I'm going to buy. And that's as simple as it is. So today, I suspect that what we're going to do is really try to carve out some level of frontline support. And I use the ES because it moves right in tandem with SPY. We could use ES options. They just take a longer time to clear. And so if you're working on something that says, hey, I need to have all my trading capital available every day, then this is what you would do. But see, here's my 39.05. That's from 2 weeks ago. That's the high. So I'm going to look for those edges that say, if they're coming into here and I know every time they came into here, they bounced, I don't want to be short. It's as simple as that. And when the trend is down and you bounce, you know that you're moving into a space where the traders are saying, hey, listen, I don't want to do anything else except what the market is telling me, right? And so let's take a look at SPY today. We have 3 levels that we have to look for. Okay, and we'll go to the 4 hour. See this 391 where it's sitting? Look at where that is. It's a wick right here on this edge, and then there's a little gap. So there are going to be traders that go, you know what? We might fill the gap. But the traders that are trying to pick the bottom are going to go, okay, we had buyers here, and then this was resistance, and it immediately turned to support. So you know what? I'm going to try and buy that. Listen, you're going to be right or you're going to be wrong, but it's telling you what to do. And so that was the same thing that I did here. Okay, so I went deep in the money to sell the put, right? I sold the 394s and the price action was all the way down at 392. So somebody said, I think it was Mark, said, why? Well, because I know it's going to bounce. I have a deep suspicion that it's going to bounce. Listen, I could have been wrong. That's why I said hard stop. I could have been wrong, but what I knew was the last time I was there, people were buying. And they bought right into the 393 area. So as soon as it gets there, I'm hitting the road. Listen, I get left in the dust all the time in these trades where people will come in and they'll go, man, I know you only got 25% here, but I got 70. Listen, I'm excited for you when you do that. For me, psychologically, it's just much better for me to peel my 20-30% off. And I know it's going to move that fast because I'm going deep in the money, right? I'm going much deeper in the money than you might say if you're being super conservative. But that's really what I'm doing. And I'm just going to go into the next space. I do not overthink the market. I am completely Forrest Gump. I just look at the pictures and I trade the pictures. And today, the pictures are saying, hey, I'm fading, but I'm coming into areas where people are going to try and buy. Guess what? They're going to try and buy it. Now they're down here like 388 or something through this edge. 388. Let me look exactly. Yeah, 388.90. Right? So we're way down here at 388.90, and this is right around this area, the 389. What are they doing there? They're fleshing out this low. Look at this. This edge right here, 388.90, totally matches. Last time they came there, they're trying to buy. Guess what? They've got a lot of sellers right there behind them, and so what you have to do is say, I'm going to watch out for this. I know that there's sellers here. I'm not going to hold it and anticipate it goes all the way up to 394. It could, because I've got upward trend on my 4-hour, but what it's more likely to do is come right into those zones that were prior areas of support that are now fleshing themselves out as resistance. I know this was a long one. I just wanted to give you the inside track of what to do. Good luck trading, and I'll see you in the Benzinga Pro Chat.